This is the first event we had a DJ at, and I think we need it for every event after this. Let's go around the panelists, have them introduce themselves, and then we'll dive in. Starting with you, Maja.
All right, cool. Hi, everybody. It's a pleasure to be here. Thanks, Mo, for having us. It's great to be in Miami. I recently moved here after living around the world, and it's such an exciting place to be at because of crypto, obviously. I'm Maja Vujinovic, founder of O Group. I've been in the space since 2009-10. And we invest and have a group of companies where we help in basically operationalize and scale in DeFi particularly.
Hello, thank Mo, and thank you everyone. It's great to be here. This is actually the first conference that I have ever gone to. Was in Miami, Mo's event. Unfortunately, I had to buy the ticket back then. But anyways, it is amazing to see how the space has grown. And a little bit about myself. I've been in the space since 2013, started off as a Bitcoin miner, put together mining boards myself. And then I'm the founder of Bitcoinist, which is a news site, and co-founder of Bitcoin.com. And just really been focusing on media companies and tech companies in the space.
Well, I'm Steve Ehrlich, co-founder and CEO of Voyager Digital, the first ever public company as a crypto trading platform to go public. We did that in Canada about 3 years ago. Excited to be here today, about taking the retail perspective for consumers. We have 3 million users and about 6 billion of customer assets today on our platform. We're only in the US, so excited to keep growing and growing the ecosystem.
Hi, everybody. Welcome to Bitcoin Miami. My name's Harry. I'm Managing Director of Quantum FinTech Group, also a chairman of Keynote. Thank you all for attending. Thank you, Mo. And chairman of Toom.com, Toom Finance.
A lot has changed over the years in investing in crypto, DeFi, Bitcoin, whatever. We can start with you, Harry. How has your views shifted over the years to now, and what is your approach now to investing in the space?
Sure. So love to share a little bit with you guys. So in this space, I started with $500 back in 2013, and I bought my first Bitcoin and an Avalon ASIC miner. So I started off with Bitcoin mining. And how it's really, really changed, at least for me over the years, is I used to just focus more on high-frequency trading, quantitative, and speculative trading with futures. And it was up until, I think, 2020. I read Peter Thiel's book, 0 to 1, where when Peter Thiel and Founders Fund, they found really, really good investments. They tended to really just focus all of their energy and capital. So I believe as an entrepreneur, it's very, very tough to do more than one thing at a time. So I just really believe in hyper-focus. So I was fortunate enough to find the Phantom team. Where are those guys? Phantom, Michael and Dave Richardson, where are you guys? So I was fortunate enough to discover Phantom, and I just hyper-focused and really just concentrated my energy just on the Phantom ecosystem. So for me, that's kind of worked out really, really well because my background's software engineering. So I think the change, at least for investment, is just really focusing on things that you care about. And by focusing on Phantom, I discovered Toom, so thank you to, yeah. And then now we've got Fanti, we've got Life, and we've got a couple, and Felix the Exchange. So just really focusing on one ecosystem instead of spray and pray. It was really more just hyper-focusing. So that's kind of my advice. It worked really, really well for me, is just finding something you're very, very passionate about and just diverting all your energy, money, and resources to those projects. Because that's really, really what's going to give you the edge in the alpha.
But Steve, you must have a very different approach, being public listed, having a lot more stakeholders that you need to answer to. What is the approach there, and how do you treat this situation?
Being a public company, we obviously have a different approach. We've got hundreds of thousands of investors and so forth that we look at. And our goal is always, when we look at different projects, and we like to list as many as we can, and invest our time in developing relationships with a lot of those projects, is continue to develop that, but also from an investment perspective, as that public company, we're looking to make investments in things that help retail consumers, because everything we do is about making it easy for the average consumer to enter the space. We have this room here today, which is a bunch of believers and people who've been here a while and been in crypto. Our job is to bring crypto for all, make it accessible for everybody, and find projects that we can invest in. Like we've invested lately in Blockdaemon and in another one of the node providers, in Figment, in that, so we could bring more staking and make it easy for consumers. So we always take a view as how could we bring more product and investments in that make things easy for consumers. As the ecosystems develop, we recently launched Phantom on the platform, and therefore, bring people in and get the average person in, teach them more, educate, and then deliver out more so they can take advantage of the ecosystems.
Maja, with education and being a co-founder of Bitcoin.com, education is a big deal, and the approach of getting as many people as possible on board. Is there other things you look at in a company besides for their path to getting users?
Absolutely, and I really want to add on to the education side of things and how the whole ecosystem and how the crypto space have grown, and that kind of adds to what Harry said, right? So you are focusing on one blockchain and one technology. But with that, we also need to make sure that we educate people how to do it, because with Phantom and all the other companies that are building on the protocol, it is getting more and more difficult for people to understand, especially around DeFi, right? And I think it is our job in the industry to make things easier and simpler. And I know that Harry is also good friends with Danielle, who's managing Wonderland, and they have done some changes with the protocol in terms of making it much more simpler for people to buy, for example, time token with WMemo. These are things that are really difficult for the end user to understand and get their hands around, because you buy a token and then you want to stake the token, but again, you need to have MetaMask wallet and you need to have all these things. And these are amazing opportunities for people because you can enter the space with a little bit of money and then get into DeFi and make a lot of money with compound interest and all kinds of things within DeFi. But you have to do your own research and you have to educate yourself, because for a lot of people, they just go on Robinhood or Revolut and just buy the token and say, just like you had the conversation with Mark Cuban, right? They don't do anything. They just buy the token on Robinhood and said, okay, now I have it, moon. Let's go to the moon. But that's not enough, right? And just one more thought to that. Like, a lot of people said how lucky I was that I mined Bitcoin in 2013. And I told them, yeah, I looked into the technology, I believed in the technology, but I know a bunch of people who just recently got in the space and bought, the Bored Ape monkeys for a couple $100, and now these guys are sitting on millions of dollars. Why was that? Because they believed in a project, they were in the Discord rooms, and they knew that this was going to be something special. So what I encourage everyone to do is deep dive into the industry and then invest.
What we've seen is that things are getting more easy to use, and this is a temporary problem with this new area of DeFi where the programs and applications are becoming more and more easy. It was like that in the beginning, and now things are just getting easier and easier. Thoughts on this, Maja? With DeFi becoming more publicly accessible, what needs to be done, what has been done, or what are you seeing as innovative in the space?
Yeah, that's a great question, Mo. And I think following up on all of these guys, what's interesting is I've met, well, at least Harry and Steve I've known for a while. We've known each other for years. And it's fascinating to see some of these guys from the beginning go just explore the ecosystem. And what Harry said earlier, I thought was really important, goes to your question, which is focus on one protocol, one project. And that goes along with Mark Cuban was saying too, right? Because a lot of what's going to come up in the next year or two is the real utility. right? And I think in the next year or two and forward, we're going to start to see a lot of regular folk get into the space. And for that to happen, UX, UI needs to be a lot simpler, right? Security needs to be there. I mean, all of that these guys know, and hence the focus probably of Harry on one project. For us, it's been really interesting to see because our specialty is really operational scale and M&A, and that's another thing that's going to come around. And I see a lot of projects that say, hey, we're going to fork this, right? And then we're going to make it a little better. And they don't have necessarily an exit for utility. They just have an exit for making money, or they have something in mind for utility, but they need something else. They need users, they need a better tech, they need, market makers or whatever else. So I think this coming year, particularly in the US, we'll see definitely direction on regulation, which I think it will be favorable. At least it is some form of direction of what we need to do, which will also define things in DeFi or what's necessary or where things will go as well. And I think you will start to see a lot of tools that are going to come up, which are going to replace even some of the services that banks such as Visa and MasterCard supply. And that's where I think it's really exciting.
Yeah, I think you're right. I think that the products that exist now are able to compete with Visa, MasterCard. They weren't for a long time, but now there's a lot more people involved and have access to this.
Yeah, can I just add to that, Mo? Because it's really fascinating. In Latin America, for example, which has been our focus, about 5 years ago, I said LATAM tech. And I started my career in Africa and Latin America in the early 2000s, when in America we're not even texting, right? I was doing mobile payments there. And I kept saying to people, last 5 years, LATAM is going to boom in fintech. And nobody believed me. But why is that? Is because, as you most know, banks don't focus on people that don't have money, right? But what's happening today is guys like Phantom and Steve's company and education piece, right? Everybody's entering the market, and everybody has one of these, right? And this gives you access. We built them in Africa, right? We know what that access meant. So I knew that the tools coming in can literally replace the services of the bank. So you're seeing them. You see Strike, you see Moeda, you see Reserve, you see all of these companies in these places that are just rocking it. Yesterday,
Cuban was talking about NFTs as a gateway drug to Bitcoin and a gateway drug to crypto in general. Let's get the panelists' thoughts on NFTs once and for all and start talking about this. Starting with you, Harry. You've seen, what do we think? You own some NFTs. What do you think of them?
So the question is, what are my views on NFTs? I think NFTs that have assets backed by them, so for example, representing ownership, we're doing something, with AlphaTauri and Pierre Gasly. So on Arteon, when they auctioned off a helmet, sure, it makes a lot of sense to me that, there's an official certificate of authenticity. But I mean, somebody paying $100,000 for this is not a JPEG or something. I think, sorry. So look. There's shit coins in crypto. There's clearly shit NFTs too, right? But just nobody talks about them right now. That's it. So that's really, really my opinion. NFTs are definitely a huge cash grab, so I warn people on this because at the end of the day, remember, if you buy a Bored Ape or anything else, if you don't have exit liquidity, you are the exit liquidity. So it's just buyer beware. That's it.
Well, it's interesting. You had Mark yesterday. We partnered with the MAB, so I got a lot of good insight from Mark over the last few months, too, and heard his take on NFTs way back over the summer when we were talking to him. Look, I have a little different view. I think NFTs it is a gateway drug, but it's the building of community, and crypto is community. And I think depending on the token, you have a huge group of your community here today, and I think it's about how you build that community, and NFTs start that. It's just the beginning of what you could use them and how that community is going to use them. So I have that little different take because I think the deeper the community goes and the deeper you build that community, you'll get some liquidity around that as well. But it's what comes from that after that. And I think it's a great start, great beginning of the utility. And you see everybody doing it. We're seeing more marketplaces pop up than I can even imagine. It's kind of nuts. But I think it's what you do off of that. And I think you needed something to give start this utility business and get it going that way, and that's a great way to start it.
You bring up a good point. There are a lot of marketplaces, and generally what we see happening is some consolidation in the space. What are you guys seeing with consolidation with blockchain companies? I've run this conference for 9 years, and Harry has acquired it in the last year, which is fantastic, and we're great partners, but this is one more merger that's happened, or acquisition. You deal with M&A all the time. What are your expectations that's going to happen over the next year? Are we going to see a huge consolidation or still much more fragmentation?
Yeah, and I think just quickly on NFTs, I'm actually between Harry and Steve. I completely agree. Coming from, I used to run a large P&L at a large Fortune 500, and I think NFTs actually in the future will be useful, and there's a complete tool for that. But I also agree, right? Paying 100 grand or $1 million for a fucking duck, really?
Asset-backed NFTs.
Yeah, exactly. So it's just a little bit strange, right? When you look at this space and you think, where I deal with companies that are literally helping, like reserve stablecoin, right? I mean, it's literally holding a Bolivar in place for mom and pop shops, right? This is a real God's work. And then you've got somebody selling a duck for $1 million, right? I mean, it's strange, but then to your point, right? What is it that they do with it, these communities, and the whole power of that network is really fascinating. To that point, on M&A, I definitely see this coming year and a year after from incumbents. One of our portfolio companies just got sold to Betterment, which is a huge success, after 1 year of work, right? Why? Because a lot of these incumbents are realizing that they need to stay relevant. They're run by people who are 50 plus usually, right? And a lot of them don't have time to understand it. A lot of them don't want to understand it. And a lot of them will never understand it. And they have a balance sheet and they want to pay for it, right? And they're going to get it. They're going to maybe get it because they just think it's cool. They don't need to get it at this point. I think in the future, some of them will need to in order to compete. I'm not one of those that believes that banks are going to go away next 5 years. People have been saying that for 10 years now, right? This is a very political issue. It's not just technology. Best technology doesn't win. It's the politics and a willpower to do something, right? So M&A that's going to happen, you have blockchain companies that are barely keeping their lights on. They're going to get swallowed up because of devs, because of product, because of UX, UI. Steve, you probably have seen that a lot. Harry, you too, probably through all the projects that you guys dealt with. So I'm definitely, this year, next year, that's a focus for us. So if you guys have anything in that, definitely ping me, for sure.
Or ping me. I'm happy.
Okay.
Yeah.
Okay, maybe first me and then Steve. Yeah.
No, I agree with you, Maja. I think that, there's going to be a lot of M&A activity this year and next year because companies it's really hard to get scale. Mark talked about that yesterday. To get scale is really hard. And a lot of marketing dollars, a lot of marketing effort. So when you realize that you might not be, as Chamath said in one of his podcasts, you might just be a product, and a product that needs to be part of a company. And that's when you could really take some good technology from some of these blockchain companies and bring it into something that has scale and grow it, and 1 + 1 will equal 4. And I think that's the opportunities we're going to see in 22 and 23. There are really good products out there, but it is tough to get that scale, and being part of something bigger, like the acquisition, by the Betterment with that, that's going to be really important for the industry to grow.
I like that you guys are competing for deal flow. But it's an important question, seeing about deal flow in the space, and thoughts about this, because many of the companies don't need to sell, and the ones that do are everybody's trying to get a piece of them. Not just you two, everybody all over the world.
I like to look for projects that have been failed and exploit. So I do like the Carl Icahn thing, where I wait till something like, and actually those have been my two biggest successes this year, was Popsicle, Exploit, and Tomb. But that's just more the hedge fund side of me trading versus investing.
I think one of the questions maybe, and Mo, I know we've talked about, but what the trend we're seeing now as an investor, which is really interesting. I know a lot of people, there are funds out there, right, A16Z and Animoca, that are really, scooping up everything. But one of the trends we're seeing, to your point, is that some of the best projects will say, hey, we actually don't want their money.
Yeah.
Which is really fascinating. And we'll say, what? If I was a project, I would want to run to these guys. But they want helpful capital, which is where little guys like me, right, come into place in comparison to them. And because we are really helpful capital, we'll help them scale. There's a little bit of a grown-up in the room with the kind of an idea to say, hey, look, you don't have to build this company to be $1 billion. You don't have to do this. You can just sell it to guys who want to stay relevant, exit, and go build something else, right? Because the scale is really tough, right?
It's the way we approach some of the investments we do at Voyager as well. We just made an investment in a tax program called CoinLedger. And by bringing 3 million users, we can get them off the ground and get them some opportunity to scale quickly, which is really hard. And that's where I think, some of that money, where they turned down other VC money because they actually wanted from us because we brought the distribution to them. So it's an interesting dynamic as companies start to figure out what's their best way to grow.
I just want to add to that, because eventually we're talking about investments and people investing into projects, and of course at some point where high net worth individuals approach projects differently. But I also want to emphasize and talk about the average Joe, right? Because most of these people are not accredited investors, and that's a fact, right? If you're in the U.S. and you just have a couple $1,000s or $10,000, you're not going to put in 100K tickets. And I think crypto is amazing because you can invest into projects without being an accredited investor. And it's nice what you guys are doing, don't get me wrong, but I also think that the crypto industry is empowering people to invest better. It's the same thing as the stock market. Like you have to go through the whole hassle to invest into a company. While with crypto, you can just do an initial exchange offering and get the token you want and then see how the project does. And I think it's giving a huge freedom for people to manage their finances and manage their investments.
Yeah.
I'd like to add to actually what you said too, Mate, because, well, first off, I'm very glad I learned Solidity, because now I've learned that the best value, even as an investor, if you create your own project, so Tomb.com is like my first project, so now we've got Life and Fanti, but creating these platforms that other people, it democratizes finance. So it's no longer, you don't have to be Andreessen or any of these big firms. The opportunities are available to everybody, so I'm a huge believer in that.
Yeah. It does democratize, like having the ability to invest in using crypto democratizes the way you invest, but there is a big difference between an exchange offering and having equity in a company. That's a significant difference, which traditional investors will look for an exit by selling equity. How are you guys approaching that? Do you guys have holdings with tokens?
In terms of what? Sorry?
You guys hold tokens or only equity in companies?
No, both. So both. I mean, it depends on the project. And yeah, we try to definitely invest in projects that are contributing to society or doing something useful for sure. And in that case, if it's a really good team and they have a way forward, they have an interesting exit, right? We'll definitely go for both, even equity and tokens, right?
We do equity and tokens on all of our projects. Even Tomb, there's Tomb Labs. Fanti's under the Felix umbrella and everything. I think it's important because the DAO structure itself is great for managing projects, but if you're trying to bridge the traditional world and just even doing simple things like payroll, operational, and whatnot, at the end of the day, you still have people that are in this world and not necessarily in cyberspace. So I think it's important for all projects to have entities attached to them, as well as some form of a DAO, because then you get accountability as well. That's super important. When I'm an investor, I look at projects and I see, am I investing as just an individual, or is there a company behind it as well? This is very, very important, because the control of the projects themselves, the intellectual property and IP typically belong to the entity. Whereas the upside in the price and the tokenomics, the way I'd like to kind of explain it is, if you want control of like a protocol or a project, you should own the underlying entity. But if you want upside in the appreciation and the speculation of the price, then own the token. And you need liquidity. So.
If you have any comments to add, Steve, the important thing over there about entities and DAOs and the token is entities. What we're seeing is that entities are created in not the best jurisdictions or not the safest jurisdictions, and that would limit the amount of people that can invest in these because of the stakeholders in the company. As a publicly listed company, the stakeholders don't want to invest in companies that are shelf situations overseas.
Yeah, our approach is the equity approach for us, being the public company. Taking the tokens and holding them on the balance sheet of projects and then having them on the platform to trade. In the regulatory environment we're in today, that's, you could get yourself in a little bit of trouble by promoting, things like that. So we kind of make a really distinct difference between the companies we invest in and the projects, and taking it from an equity approach, much different than the token. We will support those tokens, but we don't want to ever kind of cross that line. We know we're living in a really, especially U.S. side here, a very, an environment that's not black or white right now. So, it's really gray, and we want to make sure that we stay clean in everything we do.
Mate, do you have any comments to add on that? Whether you personally would invest, or as a company, in the equity versus tokens in a company?
I actually, so working with Roger and Bitcoin.com, eventually we have a giant deal flow for equity investments. However, from my own perspective, what I have found to be working much better for me is to invest into the tokens versus the equity. And the reason being is because those are way more liquid. If I like it, I can hold on to it, and it's not about just how many X's it goes up, right? Because at the end of the day, anyone looking into the market wants to make money. Let's do 5x, 10x, 1000x. When you invest into traditionally and having equity, my biggest problem with that is time, right? And what I value the most in my life is my time. And I don't have a lot of time to wait for companies, to do good, to become a unicorn. And I think this is a huge advantage for token investments and token holdings, even if you have a vesting period, versus investing for equity. Because, anyone who is a high net worth, they already have time to wait. But anyone who is new to the space and new to investments, they wanna turn their investments over really quickly. So that's why I prefer the tokens over the equity investments.
I think it's an interesting point, Mo, since we've all been in a space for a while, right? I mean, remember in the beginning, right? We were all going crazy with these tokens. And that is the point, right? You're absolutely right. This is where a lot of people saw an opportunity in crypto because they looked at the traditional investment space and they said, hell no, I'm not waiting for 8 years for this mature, right? Like, what can happen in 8 years? But at that time, right, 8 years was normal. I mean, it's still normal, right? I mean, now funds, if you're an LP in any of these funds, that is the traditional time. That is the VC time. But to your point, this is where the crypto became kind of the darling of many people. It's because they saw an opportunity to gain financial freedom in a much faster way. And actually, as a lawyer, right, I can argue on both sides, unfortunately, but I actually believe in that. And you're absolutely right. Why in the world, in this, right, abundant world we're living in, why do you need to wait for 8 years for something, right? Why? Who said that, right? And is there a way to do that better? And I think this is where people misinterpret crypto because they right away assume oh, those are quick, rich schemes. And yeah, some of them, they are, absolutely. But they're also in traditional finance, right? You can't ignore that. And so I think where crypto aims to just really do is empower the individual, empower the creativity, allow people to gain community and say, well, if you guys believe in this token, we all want to pay with this, let's just use this. And so I would be, as an investor, to I think Harry's point earlier, beware, right? But also, if you see an opportunity to push a community to succeed and make money along the way, why not? Why go back to the old world? The reason why we did create this is to have a new world, right?
Yeah,
So,
well, that's the difference between institutional investing and retail investing, right? So retail investors with crypto, with the community, get access to something that institutions may not want to do, and institutions, pension funds, they're happy with 8 years, 10 years. That's their goal. But a retail goal is not to sit with something for 8 and 10 years. You might have certain parts of your portfolio you do, but the crypto, the community, you can get in and out, and when you feel like, rather than having those long-term holding periods. And that's why we're here. That's why this whole ecosystem is building, because of that, because the ease to get in and out.
Let's change gears for a second, talk about some risks. Harry, what do you see as some of the biggest risks in the space right now, generally? Is it a stable coin risk? Is it regulation risk? What do you see, or what keeps you up at night when it comes to crypto risks?
Everything keeps me up at night. Price of Phantom, price of Tomb, the peg. Well, I think the biggest risks right now depends on where you're at. So for me, so I'm Canadian. I live in Abu Dhabi. One of the biggest things I wanted to get away with from earlier on, even though I spent a lot of time in the U.S., was regulatory risk. But regulation, if it's done properly, is actually good for crypto because it legitimizes everything. So as crypto becomes more mature, I think regulatory risk, the regulation panel I heard here was completely packed. Everybody doesn't really know what's going on. Right now, I would say the biggest risk in DeFi obviously still is unaudited projects and smart contract risks. Rug pulls, this kind of thing. So at least what we're really, really trying to do in the DeFi space, a lot of DeFi projects are very, very anonymous. But one of the reasons I think why Tomb succeeded, or these other DeFi, where a lot of these DeFi projects failed, is I put my face out there. I put my name on my reputation and everything because I believe in something. So at the end of the day, if you want to reduce your risk, invest in the people because, people that really put themselves out there, I do have something to lose. Whereas a lot of people that are out there, they're just there to make money and do a rug. That's the big difference. So I think investing is really just doing your own research and investing in the right people.
Yeah, and I think one common theme between all crypto innovators and entrepreneurs in this space is we don't sleep, right? We never sleep. It's going 24/7, 365. It's just something you have to do to stay abreast of what's going on. But from a risk perspective and a Voyager perspective, I look at just the unclear regulatory environment, and I think Maya's right. I think we'll get some more clarity on things like stable coin and maybe ICOs, but I think that's the piece that we're always trying to navigate through in the U.S. more than probably anywhere, is just that we don't have a clear picture, and you hear comments that everything's security, nothing's security. You just don't know, and you've got to kind of navigate that path, which is really probably the hardest thing to do stateside here.
Is Voyager international or only in the United States?
Voyager's only in the U.S. right now. We have the only fit and proper license given by the AMF in France to operate our business in Europe, and we'll do that in the second half of this year. We're also very close up in Canada to be able to launch our product with, a lot of people have licenses in Canada. We don't want one of the basic licenses that gives you the opportunity to sell 6 coins. We want to do the entire Voyager business, which is all the coins, 70 plus, give the earn rewards, and that's what we have in France, which we're super excited about. It gets us into Europe, and then Canada, the same thing.
Yeah, just to add add to what Harry said, I think it's the combination of regulatory risks as well as rug pulls and scams. And it's just the bad intention. So a lot of, actually, like most of the black hat hackers are now looking at crypto. Because if you're watching a lot of crypto Twitter, we're watching a lot of YouTube, what are they doing? They're going after YouTube influencers. They're scamming them with PDF documents where they can exploit their MetaMask wallet and all kinds of things. That's just bad intention. And if they can do it with influencers, then they can just mass email people, and then their money is going to be gone. They have their savings in crypto, and then they wake up, they click on the wrong link, and then the money is gone. And these are part of the reasons why regulation is going to come in and step in hard is to try to protect the investors. And I think they have to step up their game from a security perspective and from a regulation perspective to do that and to really protect those investors.
I don't have anything specific to add on this except to say that this is a really once-in-a-lifetime opportunity. You all are here for a reason because you're either making money in this, you want to make money in this, you're involved. Don't fucking sleep on this. That's all I'm going to say. That's the biggest risk. Harry is 100% right. Do your own research, right? To Steve's point, regulation. To Maja's point, just educate yourself and don't be stupid following these people. But here's the biggest risk. Don't miss on opportunities, and I'm going to end it on this because I had an opportunity to invest in Voyager, and I didn't. Yeah. So that is the biggest risk. Don't miss on things like this because we've known each other for a while.
FOMO is the risk. That's the risk you're talking about.
You brought that up, too. I didn't bring that up at all when I saw you, so.
Rub it in my face. Yeah, so that's the biggest risk, I would say. But I just be on top of it, learn, surround yourself with people that are 10 times smarter than you. That's exactly what I do. So yeah, that's it.
I think that's a great way to end it. Don't miss the opportunity that we're given.
Exactly.
I think Maja summed it up nicely.
Yeah, perfect. Does anybody else have a closing thought?
Also, one of the projects we're looking at funding on the cyber side, we're getting more into security, is how to squash fake accounts. If somebody can figure out how to squash fake accounts, come talk to me because that's a real problem. Yeah. And by the way, I won't private message you and ask you to join my trading program and send me $50,000.
Thank you, Mo. Thanks.
Thank you.
Thanks.
Thank you all.